Good morning, everyone, and welcome to the PivotBoss pre-market video for Monday, March 25th, 2024. I am Frank Ochoa, aka PivotBoss. Happy Monday, everyone. Here's a look at the daily time frame of the ES. You'll notice right here the ES pulling back just slightly in overnight trading and in the pre-market trade ahead of the RTH Open, pulling back modestly but still above the 8-period pivot-based EMA. You can see that the bullish Pima trigger zone has continued to remain intact, and every pullback into that zone has been a buying opportunity overall. We could see another round of that type of behavior here this week. Early this week, we could see a little pullback into this zone, and then we could finish the week on a bullish note. Again, this is a holiday shortened week. Friday is a market holiday in the U.S., but ahead of that here, we do have some big economic data points here, namely Thursday with GDP. And again, this market just continues to shake off any type of weakness. Now, the key level here to watch early this week is the 5250 level, or 5252. That is the previous week's midpoint. If we drop into that zone right about there, that could provide an opportunity for bulls to defend and turn this thing back up heading into the end of the week. If we take a look here at the NQ, similar price action here, a little bit of a modest pullback. Now, this market has been no stranger to pullbacks after new highs. You've seen new highs and a pullback, new highs and a pullback, etc. over and over and over again. We've just seen new highs here recently and are now pulling back modestly again. Now, the key level from a midpoint standpoint is the 18,380 level. 18,380, so that's just shy of this 400 level here. 18,380 is the previous week's midpoint. Any pullback into that zone could provide a buying opportunity for bulls to defend and turn this thing up. Now, even if we were to come down here and test the FOMC key level from last week, that could still provide an opportunity for bulls to defend and return prices higher until proven otherwise. Taking a look here at crude oil, you'll see crude has failed to really get going to the upside after breaking through 80, but has also remained above 80. The other interesting thing is that price really hasn't moved much since it printed the new FOMC key level at 80.95. It's basically just sat there. Inside day Friday, still an inside day here today, so it's a double inside day at the moment. Very narrow compression overall, and again, if this market can continue to stay above 80 here, we have a shot to get going to the upside. But this market really has not wanted to see much in the way of full-on expansion. It's gone up one pace and down two paces. So it really just hasn't been able to get going to the upside. But it has held above 80 here, and any pullback into that zone could provide a nice continuation to the upside up ahead. The key level to watch early this week, 81.71. 81.71 up here. If it can push through that level, you start to open up some upside up ahead. Taking a look at gold futures. Gold up about 2/3% right now. Gold did put in a strong high last week. Very, very strong high on the daily chart and on the weekly chart. That strong high right there. Higher high failure. Also a bearish divergence. Now, this pullback early today could be an opportunity for bears to defend for an inverted checkmark move downward. So for the most part, gold here has put in a strong high, and that should be considered the high until proven otherwise. We likely see a bearish trade sequence that develops here with a shot at rotating into the 2150 level. If it breaks through that level, we could open up enough movement to really get us back down to 2100 or even lower into 2050. Any pullback toward 2185, 2190 could still be defended for bears for a continuation lower until proven otherwise. Now, taking a look here lastly at the YM. The YM last week put in a pretty strong week overall. Very nice 3-day rally here, but on Friday pulled back much heavier than the ES or the NQ, closing near lows. This market continues to see an overall uptrending price action for the most part, And again, any pullback into this bullish Pima trigger zone could still provide an opportunity for bulls to defend and turn this thing around. Right now, super narrow range headed into the RTH Open, only 97 points of range, so very, very low volatility at the moment. And typically you'd like to stand away from that type of compression here, or look to fade the edges with an upward bias right now. Overall, this market could pull back a little bit more, 39,500 for example, and that could provide an opportunity for bulls to defend and turn this thing back up. All right, that is it for now. We'll see how this plays out here heading into this holiday shortened week. I'll see you in the trading room. Take care.